Hi everyone, it's Jared here again from Alpha Capital Group. So this week, we're taking you through another market update. Yesterday, of course, we did have bank holidays, which meant earlier closing times in some of the markets, reduced trading volume, and of course, reduced liquidity within the broader markets. So this week, we are back to more normalized trading conditions from today into the end of the week. We will, of course, be looking at the economic calendar shortly, looking at the data, what's the key focal points for the rest of the week. And also in line with that, we will be looking at the price action within the charts. So yesterday, as I said, we had bank holidays, back to normal today. And as we talked about in our daily market update this morning, in our Discord and in our social media pages, we talked about the fact that there's quite a lot of data this week. Now, if we look at our economic calendar today, we've got a couple of important focus points. We've got Treasury bond bill auctions coming out later this afternoon. We do also have the Case-Shiller Home Price Index and House Price Index in the US. Now, tomorrow, as I suspect, will be definitely a much busier day. We've got a lot of figures out in Europe. We've got French growth. We've got German unemployment rates. We've got Italian growth figures out. So we're expecting a busy trading session tomorrow morning for Europe, particularly for those who trade fundamentals, those who trade news, or those who trade very, very short-term time frames within scalping or shorter-term strategies. Now, with that aligned, we do also have Canadian GDP figures. We do also have the Beige Book out tomorrow as well. So keep an eye on that also. Now, with that aligned, Thursday, again, another busier day. We've got GBP mortgage approvals. We've got retail sales out in Germany. We've got core inflation rate out in Europe as well. So it'll be a busy week, broadly speaking. A lot of PMIs, a lot of ISM data out on Thursday. So we're expecting today to start to pick up the volatility and really kind of start to elongate then into Wednesday, Thursday, and of course the close of the week as well. Now, moving along from that is really about kind of picking up where we left off last week, looking at the broader dynamics, looking at the market bias. And of course, I suppose that the best focal point is to look at the dollar, the DXY. Fairly strong move, fairly strong closure last week. Since then, Monday and Tuesday, we've had very, very uppity and very, very choppy back and forth price action. And of course, if you look at a 4-hour price point or even a 1-hour chart as well, you can see that as well. So the order flow in the DXY is fairly bullish up until this morning, where we did take highs at around 104.50, but we immediately made this fair value move back into the liquidity area, back against this buying impulse that created, and back to the 104 handle. And I suppose that's really going to be the key pivotal point today, is how does the market dynamic react around this 104 level? Because as I said, we are creating bullish order flow. We are getting that upside progression. So we're just waiting to see, is there another return back into this fair value area of interest, point of interest, around this 104.30 level. And I think that should be something to keep an eye out for this week. So something like this, let's say, for example, would be a very, very nice scenario if we were to see the dollar, let's say, tail off and become a little bit more weaker. But also simultaneously as well, you've got this area of interest over here. So should we kind of see a rapid bounce above 103.90, well, you're still creating order flow. We're still reacting from liquidity. Even though we took out this morning in yesterday's lows, weekly lows so far this week, we are reacting very, very prominently from Friday's lows, which came in just before the US session, where we had that rally into the afternoon, and of course into that kind of flatbed softening close, as I said, above 104. So keep an eye on that. Keep an eye on that this week, just to see kind of how does that react off of. Gold is also a very, very interesting one. So last week we talked about the potential to see, could we see gold rally back into that $2,000 level? We talked about it very, very vividly, very, very clearly last week. We were obviously breaking down. We were obviously creating bearish price action. We were starting to see the potential, shall we say, for a little bit of a softer bottom coming through. And that's really been kind of made a little bit more evident and obvious today. So if you look at gold today, you'll see this very, very aggressive. Now, some exchanges, some brokerages were creating these wicks overnight, some weren't, so just be wary of that. But we did create this kind of shallow bottom this morning, this V-shaped bottom, particularly on the 15s or 30s. You can get this V-shaped bottom, and we're starting to move higher again. So at this point in time, I would be really focused on to see whether gold can really react off of this 76 to 82 dollar price point on gold, and should we actually create a bullish closure above this kind of decisional shorter term area here, then you're really looking at price action continue to mitigate this bearish order flow that we saw out through the course of last week and working itself back above this 2000 level. But short term perspective, keep an eye on that 75 to 80 area. Keep an eye on this region here to see if there is any sort of reaction, and to see can we actually start to see the markets rally a little bit beyond that or off of that as well. Okay, so that's kind of where we're at on gold. If we look at Euro USD, kind of a very similar move. Euro USD, gold, very, very kind of similar moves. We talked about it last week, the order flow from where we were at. So I suppose this time last Tuesday, we'd identified swing lows, or swing highs, new lows, retracement, new lows again. So this was the previous Fibonacci structure that we talked about last week. I said we were looking to see could we break through 107.50 and create lows below 107. And in essence, we've done that. We got the reaction. Very, very strong movement of fib levels. You can apply any one of these you like, but you've got discount zone. You've got if you're looking for the broader move, you've got 61.8. Nice little reaction from the liquidity area, straight off back into new lows, and of course continuing the order flow of lower low, lower high, retracement, selling again into that bias, and that's exactly what's happening today. So we've created shorter term lows below 107. Again, V-shaped bottom. Very, very nice recovery. So, of course, the euro-dollar recovery, the gold recovery is brought about by the fact that the DXY is seeing some selling. So you can play that correlation very, very easily by just looking at current sentiment retrospectively to the price action of the time frame that you're looking at. And you can see that as well. Very, very clear down, followed by that movement back up. Now, if we remove the fibs for a second, just to kind of update on where we are currently this week, you've got 1 hour, 4 hour highs here around about 107.40. And then you've got this kind of combatants area of selling price action from under 108, 107.90, where we've effectively sold off below into this 106.60, 106.70 level. So kind of similar to gold. We talked about that 1975, 1980 level. Euro USD decisional area is really here going to be around 107.40, 107.45, 107.50. This area should be pivotal today to see whether we actually reject off of this and maybe propel lower again, or whether we actually break through, take out some of this order flow that we've been creating, shorter term order flow, and actually mitigate from the move that was created last Tuesday, where we started to sell off from this 108, 107.80. So you've got this area here, you've got a secondary level here, and they become the two focal points within this bearish tilting trend that has been observed or witnessed over the last couple of weeks as well. So keep an eye on both of those regions. As I said, I'm just going to put in the second one as well. You've got 107.45, 107.40, 107.80, 85 as well. So keep an eye on both of those. Cable, again, retrospectively almost identical. Right, last week we talked about this very, very clear bearish trend. Order flow, we took out 124.50. I did mention a couple of times, keep an eye on that 123, 123.50 level. We got a very, very nice reaction and bounce off of this liquidity area over here in the face of very, very heavy selling. So you can see that very clear order flow, lows and highs being created continuously, where we see that V-shaped recovery, significant rally back up, and price action bounces, or it has bounced very, very quickly back into this region. So similar to Euro USD, as we talked about there, 107.40, 45, 107.80, 85. You can see the very, very same thing happening on GBP USD. You've got this 124.35, 124.40 level here, and 40 points approximately above that, you've got this secondary level up here at 124.85. So I suppose with both pairs, these kind of two near-term levels, these 1 hour levels, become, I suppose, the primary focal point today, and obviously into the afternoon, into obviously today's close. But also just being aware that there is a secondary area above, should that kind of momentum become a little bit more consistent and a little bit more strengthening through the course of the afternoon as well, along with that. All right. So then lastly but not least is moving across the dollar yen. Okay. Before we turn to AUD USD. Gold, or the daily time frame, should I say, is just massively bullish. Okay, so if we pair it back for a second, you can see that out very, very, very quickly on the daily time frame. Just new highs continually being created. We had that very, very strong closure on Friday. We're starting to see that little bit of a pullback, but again, like everything, trends will move in both directions. Trends will move. They won't always be bullish. They won't always be bearish. You'll get movements. You'll get retracements. It's all about being consistent and being rigid to be able to identify the different parameters, the different moving parts retrospectively to the time frame that you're looking at. Now, if we look at 4 hour, you've got the peak high here. We've broken through it. There was a little bit of a pullback to test it. Since then, we've just continued to grind higher, kicking on through 139, kicking on through 140, and just coming in with tops underneath 141. And that is kind of where we're currently at into the beginning of this week, or Tuesday of this week. Now, when we look at the 1 hour chart, You can also see the order flow playing out very, very nicely as well, because you've got high, as I said, higher low, with peak highs, we broke out, we came back to retest, you're getting those highs, retracements, so you're getting those kind of trend moving directions. Now, if we isolate the current low up here at around about 139.50, approximately speaking, into kind of 140.95 or in that approximate region, you can see that today we are getting that pullback, we are getting that retracement. So you've got the 61.8 coming in at just underneath 140. You have this liquidity order block here coming in at 139.70. So this area here should be pivotal. If you are or looking to buy dollar yen today, it should be coming out somewhere in this region to see, well, firstly, let's see how does the market dynamic react around this region. Secondly, then if you get that confirmation, you can then look to take this higher accordingly, whereby you're just continuing to play at the order flow of this current bullish trend. And of course then, as I said, anything contrarian to that or anything opposite to that, you're really then looking for the break of trend, which means taking out structural lows. So you've got structural low here, you've got short-term structural lows here, and then your more recent one then beyond that then is back in this region down here, 138. But as I said, dollar yen is still very much bullish, broader trend, higher time frame daily trend, very much bullish. We are getting those shorter term retracement pullbacks, so it's just important to be able to reconcile both biases with that as well. Okay. Then lastly, in the FX space, just before we finish with indices for today, we've got Aussie dollar USD, and Aussie dollar USD has broken through the trading lows that was created for the year, right? So when the chart opens up now in a second, you'll see a month or several month consolidation between kind of 65 or just underneath 66, between 66 and 67.5. You can see it here visibly between March, April, May, and into the end of May, where we've now actually broken through those structural lows. So it's just about being aware of that. Now this is again looking at kind of where we've been all year. This was the end of last year, November, December, rallied all the way up to 71. We sold off back into this value area range here between 66 and 67.5. And in the last couple of days, into last week, Thursday, Friday of last week, we broke through the lows, forming bottoms here around 65. Monday and Tuesday this week, we are pulling back against the grain, excuse me, back into this value area here at 66, 66.50. So for me there, I would be kind of focusing on the 4-hour order flow, because when you do so, you can also identify that this was the 2-3 month consolidation, very up and down, zigzag, breaks out through the highs, takes the liquidity, insinuates buyers into the markets, and then reverses on a fake out break back into the value area, and then subsequently takes the lows below 65.80, 66, breaking into the 65 bottom here. So at this point in time, keep an eye, because of course you've got order flow up here at 67.65, you've got order flow here around about 66.50. So these become really the areas to be watching if you are looking at getting in on selling positions. So up around here, second area here as well is kind of where I'm looking at myself from a liquidity perspective, from a value area perspective, from a discounting area to try and find value. Those are the two areas to be looking at. Yeah, you do also have your support and your resistance. You're buying off your retest or selling off your retest at 65.80, but these become additional levels should price action get a daily or 4-hour closure back above this 65.80. If you get a 4-hour closure back above this, most likely is it's going to continue breaking higher, and at which point then you can then target that secondary level of interest. All right, so that's the FX markets. Rounding off then the indices today, we've seen S&Ps and Nasdaq continue to grind higher. Okay, so last week we talked about that retracement in the S&Ps. If you go back to last week's video, we were breaking higher into 42. We did say focus on that retracement back into this 40, 100, 40, 120 level, and we have seen a very, very strong reaction from that zone, almost to the area, all the way up, takes the highs of the liquidity back down into this value area, strong reaction. And of course, markets creates that V-shaped move again, whereby we kick on, we continue to create this continuous trend of bullish price action, and we are seeing the S&Ps today, Tuesday, 30th of May, into month end tomorrow, trading above this 4,200 level. And I suppose that's going to be all eyes then. You can even see it as well into yesterday's close, although we had obviously bank holidays. You can see very, very clear consolidation here in the 1 hour above 4,200. Aggressive break today up to 42.30. So even from a shorter term trading perspective, you can also apply a short term value area there, right? So where did the selling end? Selling ends roughly here around about 15s, 18s. So likelihood is you're probably going to get a short term pullback into this area down here. Look to see if this area holds, and if it does, you're probably going to get the next springboard higher, which will most likely take you above 30s, into 40s, into potentially 42.50s, where this bullish trend is most likely going to continue. Now, contrary to that, if you look at Nasdaq, it's been a lot more aggressive. It's been a lot more bullish in its price action, in its structure. Last week we were identifying the retracement back from that 13,900 level back into this 13.6. So the 13.6 was obviously the August highs. We talked about it last week's call. We did technically break underneath it temporarily. You'll see it here. We did technically break under it temporarily, but you'll see how the price action comes down, breaks through it, gets a strong daily close back above the August highs, and close very, very strong on Wednesday. Thursday into Friday, we saw that bullish price action continue. We took out the highs at 13.9s. We've even broke through 14,000. And since then, since Friday afternoon or Friday's close, the markets hasn't looked back. We closed very, very strongly on Friday. Monday has also continued to tick higher. And Tuesday, today, we are trading just under the 14,500 level, which shows at this moment in time, Nasdaq, tech stocks, S&P stocks are still very much continuing to the upside in that regard. And it's just about being aware of that as well, being open-minded, but also being constructed in that viewpoint. Now, similar to the S&Ps, again, both had very, very strong breaks last week. You can also see NAS creating that range. Aggressive break this morning into just underneath the 14,500 level. So as a trader, keep an eye on the pullbacks into this value area. And you're really looking at this kind of 350, 370 area for a movement back into the value area. And then looking to see, can we ultimately take this beyond through 14,500, 14,600, 14,700, and then you can start looking at those bullish moves. Now, if that were to play out and there's buying opportunities coming in here around 14, let's say 14,350, 14,370, then your next key level is really up above 15,000. You've got 15, you've got 14, you've got a strong daily order block area here from really 14.9 into 15,250 on the daily. If you were to kind of hone in on that in a little bit more detail, go back to February of 2022, you've got a very, very clear top formation. You'll see it here structurally. Liquidity area breaks down back up to value area, selling starts. So the buying end's really up here around 15,200. So that's why I'd be looking for a closure back above 14.9 if we're to start to see that continuation this week of bullish price action. And they're really looking to challenge this area up here around 15,200, and that should become a focal point where this bullish trend, that shorter term bias that we're talking about, continues to play out through the course of the week. Now, similar to that with the Dow Jones, it's contrarian to the sense that the other two are very, very bullish, but Dow Jones is still creating bearish order flow. Why? Because of course last week we took out the 33,000 level. We did say look to see how far does this extend to. We did get to the lows at around about 600, 550, mitigating some of this bullish order flow. Now we've still areas down here 32,000 to kind of come and clean out on the liquidity, on the order flow, but we are grinding there. We are getting there. Okay, so last week, a very, very clear sell-off through the early parts of last week. Monday, Tuesday, Wednesday, strong sell-off. Thursday, Friday, the Dow Jones did recover in line with the other two. So Nasdaq, S&Ps was holding at highs. They broke to new highs. The Dow Jones had broken lows, but we came back up into that value area. And that's where we currently sit now. We currently traded 33,100 at the 50 fibs. So if you're isolating swing highs, swing lows, back into the retracement, we're sitting at the 50 fib. We did reject 61.8 this morning at 33,250, or just underneath 33,250. We have a lot of order flow here. You've got liquidity here at 300s, 400s. You've got decisional. You've got the top of the area at 580. But price action now, just keep an eye on this today to see how does the markets react, how does sentiment react, because of course you would like to see a little bit more of a higher clean out of the liquidity. If you were to sell Dow Jones, it would be coming really from this 350, 400 level, and then maybe look for a decent or secondary run lower. So Dow Jones is contrarian to the other two in the fact that the other two are very, very bullish. They're creating bullish trend. They're creating bullish order flow, higher highs, higher lows. Dow Jones is doing the opposite. So just be wary that not all of the indices will always be correlating into the same direction, even though they are all risk assets. And that then brings us really into Europe, where we finished today. Okay, so FTSE last week, we talked about this area here. As we were recovering up, as we were bouncing up, there was one area here around 76.25, 76.40 shorter term highs. There was also a secondary area up here, really up around the 77.50 level. Should we see a decent recovery or decent retracement in the FTSE? Now, since then, since Thursday and Friday of last week, the bias, obviously Friday, very, very strong. We saw indices rally across the board. but topped out here at the 76.45 level. And you'll also see it on the 1 hour order flow as well. Very, very clear top. Forms the top this week and this morning as well. Markets sold off again from the 76.40 level all the way back into 75.80s. And it's really a case of now, if the FTSE takes out these lows at 75.60, we really should be looking at that deepening sell-off, that continuation, that higher time frame trend that we've talked about for several weeks now, continue to play out, where price action navigates through, as I said, 7,700. That was the first point, 7,600, and then which we are currently underneath at this moment in time, and really working ourselves back into the 73.50, 7,400 level, which becomes the most logical scenario. Even if we were to get a daily closure today, if we were to get a daily closure today taking out these lows, you're going to get that continued order flow. Very, very clear trend direction over the next week or so, most likely going to continue. So keep an eye on the 4 hour, keep an eye on the 1 hour. Very, very clear order flow, as I said, there on that one. And then lastly but not least is the DAX and Euro Stoxx. So DAX, last week we mentioned this massive rally up into 16.3s, reacts off of all-time highs. What does it do? Straight back to the value area. The value area we had through April, through May, into the latter ends or mid-May, where we had that aggressive break above 16,000. What goes up must come back down eventually, and price action has rallied all the way back into this value area, down into the value area, where we've seen that strong bounce on Friday, and we currently sit at 16.50. So this is kind of where we're at now in the European session. We have short-term highs here at 16.050 after a very, very nice open today in the European market. So anything above kind of 16.50, 16.1 most likely means that we're coming for another run at 16.300s. So it's really just about watching the shorter-term order flow to see how does market dynamics react around the 16.100 level. And as I said, very, very strong buying this morning from 15.9 noted on 15, 30s and 1 minute charts. And you only have to look at the order flow today as well at 8 o'clock in the open. Short sell-off, strong reaction from the lows, 15,900, 15,920, and we've continued to churn higher from 900s into 16,050s, where we're coming off or just holding at these highs. So keep an eye on this one today. You've got a bit of a range developing now. If you look at it, let me just create it for you very, very quickly. You can see this range kind of playing out as well. So it could be a case where price action sells off again back into this region, which only means then the price action now is taking a little bit of a break, a little bit of a consolidation at a fairly important area of interest. So keep an eye on that one this week. As I said, Friday's aggressive buying really started here around the 15,750, 15,800 level. So if we do, let's say maybe see a little bit more selling coming through today in Europe, FTSE selling off, let's say DAX, Euro Stoxx sells off, then it's a case of, well, if we break 900s, we're coming for this liquidity down here, and that's really the focal point for a retest of this area. All right, so keep an eye on that one. And then last but not least is Euro Stoxx, which has been very range bound, very choppy for the last number of weeks, really literally now since the beginning of April, where we've been trading just underneath the 4280 lows into the 4400 highs, until last week, where we did technically break through. We did rally all the way back up on Friday again, where we're trading back above the 4300 level. So back in the previous range, back into consolidation again. So keep an eye on that one. And as well, if you look at the order flow as well, not as bullish as the DAX. So the DAX is really sitting at yesterday's highs. The Euro Stoxx is trading a decent 20 points under. So that's a fairly significant underperformance in the Euro Stoxx compared to the DAX as well. So keep an eye on that. If we were to sell off today, you're really looking at 4270, 4280 becoming the downside focal point. Reevaluate to see how does the price action react off of this region, to see can we actually start to rally back up again and back up into the range into 4400, or whether we take out these structural lows and continue the selling point. So this area of interest here is the key area to focus on into the rest of the afternoon as well. All right, so that's pretty much it for today, everyone. Back again properly this week for full market diagnostics and analysis this week. Busy week with data, busy week with price action, and of course with bond auctions, Fed speakers, beige book, and a lot of data prints in Europe as well. So trade safe this week, and also have a great week, everyone.